Lucas, it's good to have you here to share once more.
Again,
Yeah, let's get to share once more. And this is a question that I have been wondering for a little bit now, and that is, whenever you're going to buy a house, right? You're not going to have cash to purchase it. No, most likely you won't. So you're going to get a mortgage. So you're going to get a loan from a lender, and there are different type of apparently different type of pre-approval. There's a pre-approval and a fully underwritten approval. Now it sounds impressive when it's a fully underwritten, but what's the difference?
it does sound impressive, doesn't it? And
Fully
if you look at our
underwritten.
contracts, even on our car contracts, it makes that distinction. It's asking, do you have a pre-approval letter or do you have a fully underwritten pre-approval? And I'll be honest, Gary, most consumers don't know the difference, right?
Yeah.
So pre-approval letter, you can get one of those from any online bank. My favorite is Joe's Lending Shack.
Wow. If that is the case, then why make the distinction then? What?
Well, let's talk about the difference. So a
Yeah.
pre-approval letter just looks at the very surfacey things that are involved in getting a loan. So
Okay.
basically they won't run a credit check. They'll look at your income statements, your taxes maybe, and a couple of very surfacey things and say, okay, we think we can give you a loan.
We
And they'll
think
ship that out to you.
we think
You,
we
Gary Yao, and
Mhm.
Mrs. Yao are approved for a $750,000 purchase, which means you can buy a half a garage in the San Gabriel Valley,
Yes. Yes. Yeah, sounds
right?
enticing, right?
Um, and most people get one of those and they run out and they start looking to buy a house.
Well, yeah, I figured that if I'm pre-approved already, I
I'm
am
pre-approved,
pre-approved. Yeah,
baby.
I'm pre-approved. So, gonna buy my shack, my garage.
The reality of it is once they find the home, because then they're going to start looking for a home. They're going to do the work of looking for a home. They're going to find something that they're going to become emotionally involved with. They're going to fall in love with,
Mm-hmm.
right?
Mm-hmm.
And then, and only then, is the lender going to really start looking deeply at their financials, right? They're going to run a credit check. They're going to, get more than 2 years worth of tax returns. They're going to verify their income and employment. They're going to do all of these other things, right? I mean, I've seen all kinds of incredible stuff come up. Like I had a lender when I bought my first house with my wife
Mm-hmm.
asked for my divorce papers from my first wife, which was 12 years before that.
Wow.
I'm like, that was 12 years and 3 moves ago, and you want that paperwork?
They want to make sure that you're fully divorced.
They wanted to make sure that she had no connection to the house. Absolutely, right?
Yeah, it makes sense.
But I didn't know this at the time. And I
Mm-hmm.
was, really frustrated, right? And my wife had found a house that she loved, right? And we
Mm-hmm.
were buying it. And
Uh-huh.
they were asking for something that was long in my history in my book, right?
Yeah.
So the difference between just a pre-approval letter and a fully underwritten pre-approval is the lender actually goes in and gets all of this documentation from you. They look at all of this stuff. They have their underwriters review the file. And then their underwriters say, yes, we will approve the Yao family for
Mm.
$750,000 for sure. Just find the house.
Yeah. So the way I see it now that you explain it that way is that I get credit reports from my bank, Bank of America, every once in a while, every month, I get like a credit report and have a number in it, 700, 600, whatever it is, right? So,
Right.
but there's also a more detailed one where I have to pay, I think, what, $50 if I want to get a full report on it. So that's how
Right.
I see it. The ones that's a free version, and that's the one that get the details on it and what did I spend on, or if there's any delays on my payments, it will show,
Right.
right?
And what can happen here is you can go through all of this. You pay for a home inspection, you pay for an appraisal. The bank decides to do your fully underwritten approval before they lend you the money,
Yeah,
and something pops up that you
yeah,
didn't know about, or that, right? And boom, not only are you out the money for the appraisal, you're out the money for the inspection, but you don't get the home that your wife already loves or that you already love and that you guys have decided to make your home. And
bummer.
that can be really devastating, right? It can
Yeah,
be devastating for you, the consumer. It can be devastating for your relationship with your agent because they didn't know enough to have this conversation with you. So when I sit down and I do a pre-meeting with all of my buyers before we buy a house, and this is one of the things I talk about, the difference between a pre-approval letter and a fully underwritten approval.
Mhm.
And when you're making an offer, if you already have that fully underwritten approval, it makes you a stronger buyer. It makes your offer better. It means you can close faster,
Yes,
which
we
the
like
seller
that.
likes,
Mhm.
right? And you're a more certain buyer. It's almost the same as cash.
Yeah. One thing I do also is that I have a conversation. Let's say that I'm actually representing the seller, is that I have a conversation with the lender, of the buyer's lender, and find out more from like, hey, what's the situation here with your buyer? Even if they have a fully pre-approval, because there are things that there are nuisances and details that you might want to explain and understand, like, okay, there could be something here that could be a hiccup. Well, as long as we're aware of it, we can work with that.
And I'm willing to do that too. I always do
Mhm.
that as well. I have that conversation. My concern is, and I want to tread carefully here because I
Mhm.
know a lot of lenders watch your podcast, is that just like real estate agents, loan officers are salespeople. They're
Mhm.
a commission-based salesperson and they want to get the deal.
Yeah.
So there might be some instances where they're willing to tell you the
Stretch.
things that they think you want to hear in
Mhm.
order to get their offer accepted.
Yeah.
The underwriter is an hourly employee who has no skin in the game.
Right. He's the
So
one who's
I
in the
would
background.
much rather see something from the underwriter that says, hey, I'm good with this file, than the
Okay.
loan officer telling me what they think is a good buyer, right?
Right. So is there's an extra step? Like, does it cost the buyers any money to go that route? Let's go for the full underwritten.
No, doesn't
Like,
cost them a penny.
mhm.
All it costs them is a little extra time and effort,
Yeah.
right?
Mhm.
Making sure that they're pushing their loan officer to do it, because a lot of loan officers, and here's the thing. So if you walk into, let's say, a B of A or a Chase or something like that, right?
Mhm.
They're only going to give you a pre-approval letter.
Yeah.
And the simple reason is because they literally have hundreds of thousands of people a year walk in who want to get a home loan.
Yes, and they don't
And
commit
what
to it.
percentage of those people actually complete the loan process?
You know what? I wouldn't know. I
Very
know.
small,
Yeah.
right? So it's not worth their time and effort to go through the extra due diligence of running a fully underwritten pre-approval.
That's why they don't offer it then.
That's right. That's why I always recommend that my buyers work with a mortgage lending specialist,
Mhm.
right? Rather than your bank or your credit union, right? Work with somebody whose only business is doing home loans.
Well, on top of that, the banks, the traditional banks, Bank of America, Chase, Wells Fargo, which are the biggest ones, the lender, they are paid hourly. It's not like the ones that work for a bank that are paid hourly. The ones that are lenders that are paid on commission. So obviously, it is for the best interest for the lender or the broker to get you approved,
They're
because
paid hourly and they might have been a teller last week.
possibly. So yeah,
I
so that's
mean,
the difference.
that's the biggest difference is the experience of width and breadth of experience. And I think that's what you're talking about here, of
Yeah.
the person that you're going to get to deal with
Hmm.
in that situation, right? And the person that you're going to get to deal with, if you deal with a specialized mortgage banker, somebody who only does home loans and only gets paid if they successfully complete them,
Hmm.
versus somebody who's hourly sitting at a desk at a bank waiting for people to walk in,
Yeah.
it's going to be a vastly different experience.
On top of that, it's also that the bank only offer their bank's loan package. When you go to
Correct.
a broker, a lender broker, they have the option to search for all the myriad of different products in different loan institutions, lenders. So they can give you the best rate and possibly give you the best rate or the best option in your specific scenario, not just one bank product. So you have better choices, or better options for you and your family.
Correct. Correct.
Yeah.
Yes, a bank is only going to offer you the bank's products. They're limited amount because their primary business model is not doing home loans.
Let me guess. Business loans.
They do business loans. They take your capital that you deposit with them and they loan it out to other entities, and that's how they make their money. That's their primary business model.
Yeah.
A mortgage lender, their primary business model is doing home loans for consumers like you and I.
Yeah.
And then a mortgage broker can shop different mortgage lenders and different banks and find you the absolute best rate. But a mortgage broker is going to cost you a little bit more. They're going to charge up their fee on top of the other fees that you're paying. So
Mm-hmm.
really, you really have to know who you're talking to, what their availability is, and how they can best serve you. Because really, it's not about, oh, I like Sherry down at the bank, so I'm going to do business with her, right? I like
Right.
Sherry down at the bank too. But
Mm-hmm.
when it comes to shopping for me and for my family, I want to get the best deal, right? Because a 30-year note, just like any other purchase, is probably one of the largest purchases you're going to make in your life.
That's a lifetime commitment. That's all your what's it called? Your working years.
Yeah,
You're committing all that time to
correct.
that mortgage.
Correct.
Mm-hmm.
So make sure you're making the right choice. Gary, I think we're out of time here.
Yes. So Lucas, how can people get a hold of you?
Thanks so much. I appreciate it. You can call me directly on my cell. It's 714-356-7142, or you can email me at lucas@sellmyhomerealestate.com.
Awesome. Awesome. Well, Lucas, it's been a pleasure talking with you once again. And until next time.